I know I'm going to get a lot of hate for this, but my prayers have become true. On X, I've been begging and praying, and on here as well, on YouTube as well, that I want a Tesla to go below 200, and that's exactly what just happened. If you guys been following me for some time, you guys know that if it goes below 200, I'm going to start dollar cost averaging even heavier. So I'm extremely excited, but why did it go below 200? Is it something that we should be worried about? There is some news out there. Is it out of proportion? Has the bear taken control? Is it as big as it shouldn't be? Like, what is it? Why did the stock go below 200 and why is it panic selling? And now that's what I'm going to go over today. I did find some interesting stuff that I do want to share with you guys. So let's get down to it, man. Do me a favor, smash that like button and subscribe if you haven't already. Let's go. So first, let's begin with the post that I made on X here. Why Tesla stock is selling off today. Reason number one, high chance of another interest rate hike. As you guys already know, this Wednesday, Powell is talking, and we all know what happens when Powell talks. The stock market is very uncertain, and if there is another chance of another interest rate hike, which I do think there may be, that means Tesla may have to cut more prices. And going on to number two, that would mean a lower operating margins for Q4, meaning margins have now bottomed for Tesla, and that is not good. Point number three is shortage semiconductor chips, meaning Tesla will have a low supply, meaning lower delivery numbers in Q4. Now, I did more digging into this, but we'll get to that in a second. And last but not least, BYD overtaking Tesla in deliveries. Now, they are neck and neck in Q3. Do I think it's going to happen in Q4? Maybe. I'm not too sure. I do think Tesla's going to have a monstrous Q4, but I don't think BYD will overtake. And if they do, it's not that big of a deal because just recently BYD is now negative cash flow, which is absolutely ridiculous. But anywho, there was a lot of rumors that the reason why it dipped this bad just yesterday is because Elon sold some shares. News fact, Elon did not sell any Tesla shares. That's not a reason. But let's go back to the semiconductors because I did more digging here. And according to Gary Black, he says that Tesla weakness today could be due to big on semiconductor guidance miss minus 18% on semiconductor cells, silicon carbide chips to EV makers, and cited increased risk to automotive demand due to high interest rates. Now here's the thing, I did more research here. It looks like Tesla is slashing their silicon carbon semiconductor chips. Majority of the chips they're getting from TSLA or Taiwan Semiconductor chips. So when I put two and two together, this is not really affecting Tesla as much, but it does affect the macro as much. But anyways, he goes on and says, on semiconductor sales to automotive players with over 50% share of global EV sales, including 4 out of the top 5 China EV makers. On semiconductor reduced its 2023 SIC revenue forecast from 1 billion to 800 million. So 20% decrease, that is a very sheesh moment. But again, Tesla is not a big supplier of this company anymore, so it's not much of a concern. But what is a concern that everyone is now using that to justify why Tesla stock went down is Panasonic cut its domestic battery production and cited Tesla Model S and X demand weakness for cutting their outlook. Now here's where the whole market panicked because Panasonic is now coming out and saying that, yeah, we're going to reduce our battery production because our customers, which our biggest one is Tesla, are not selling enough cars, and so we have to slow down. This was like, oh my god, demand and more price cuts and all that kind of stuff, pretty much the list that I just listed, and that's what made the stock go down. But if we do more digging, and shout out to Rob Meyer for actually going and looking into Panasonic earnings report, we get to see exactly what's going on. If we take a look at page 3, Panasonic says that furthermore, the company decided to set the automotive battery business as the priority investment area and will proceed with management initiatives by taking into consideration the revision and replacement of our business portfolio towards shifting to a growth phase. So overall, it looks like they're gonna go into a growth phase rather than cut. But that's not where else that's interesting. Shout out to Rob Meyer again for pointing these out. If we scroll down to page 8, it says here, the downward revision of net sales is due mainly to the impact of accounting treatment for the US IRR tax credit and energy, as well as the deteriorating market conditions in lifestyle and industry, despite the upward forecast for sales in automotive with the gradual recovery of automobile production. So in essence, what it's saying here is, yes, there is a downturn in vehicle sales because of high interest rates, as they just mentioned. They are acknowledging that that is a factor, but they are saying that it's an upward trend, is an upward business, and there's an upward forecast for this. And so they're going to go into the growth phase while all this is going on. And here's the other interesting thing, guys. Take a look at this chart here. Sales volume by region. North America is steady and actually growing. It's just the Japan market is going down. So really, when they say cutting battery production, they're talking about what they're domestic, not international, which would be North America. So really, this is whatever the media is saying right now, they're twisting it to make Tesla look bad, in my opinion. That's what it looks like, because Panasonic is saying completely something else. While the whole media is going like, no, Tesla's gonna not selling the vehicles, the EV adoption is no longer there, because Panasonic came out and said we're cutting battery production. No. Panasonic said it themselves that they're gonna be going into a growth phase, and they have an upward forecast for EVs going forward. Geez, the FUD out there is absolutely insane, and I love it. But to debunk two things, guys, all right? So we got the semiconductor chips company saying that their EV customers and conductors are going to be ordering less. That's what On Semiconductor is saying, and people think that, oh my God, if they have 50% of EV, share out there, supplying 50% of companies that produce EVs, and these guys are supplying them in semiconductors, I mean, Tesla's gonna be hit hard. But then we know that Tesla's plans or already have silicon carbide semiconductors already, chip makers. So really, that's not too much of a concern. Maybe let's say 5 to 10% of it is coming from here, but majority of Tesla's chips is coming from TSMC, as I mentioned earlier on this video. So that's debunked. That's number one. Number two, Panasonic trimming down production. As we just saw, nothing to do with North America or Asia or anything like that. It's just Japan, talking about Japan. And in fact, they're saying that they're going to go into a growth phase to make more of these. And their upward forecast for automobiles that in the next 2, 3, 4 years, they're going to need, because Tesla's going to continue scaling to 4, 5, 6, 7, 10, 20, 30 million vehicles annually. These are the facts. These are the things that you got to be looking for when there's FUD spilling over the market. But let it continue. I like to buy more on the cheap. So Pejjy, man, I'm scared. What do I do? Do I sell? Do I hold? Do I buy more? What do I do? Look, not financial advice, man, but if you need money in the next 3, 6, 12, 15, 18 months, I wouldn't recommend investing into Tesla, man. This thing goes up and down. I mean, it's a great stock to swing trade. It's a great stock to day trade. I mean, I'm not promoting this. I'm just saying the way how it's so volatile. You can make a lot of money, especially with options. I haven't done options before, but darn, you can make a lot of money with that. But if you're simple like me that just wants to buy and hold until 2030, well, I mean, if you're doing that until 2030, then, I mean, in my opinion, I'm buying as much as I can, man. I'm waiting for my funds to clear so I can just buy more shares, as simple as that. But if you just bought the stock to hold on for another year, 2 or 3 years, I don't know, man. I would reconsider. And if you need the money, I would say sell. If you really don't need the money, keep it. Don't sell it. Keep it there. Learn from your lesson. Learn that Tesla is not a stock that you can get quick rich off within a year or two. It's a decade-long investment. That's my opinion, and my opinion alone, obviously not financial advice. But what I'm doing, as I just mentioned, I'm waiting for my funds to clear so I can buy more shares. Simple as that. I promise you guys, in the next 5 years' time, 10 years' time, no one's going to even remember what happened October of 2023. Happy Halloween, by the way. We're getting the stock below 200. Absolutely hilarious. But no one's going to care. No one's going to remember what happened in October of 2023. Do you remember what happened in March of 2019? That was a bad time for Tesla. Yeah, exactly. Nothing happened. I mean, nobody remembers. They got to go back and say, oh, yeah, probably that happened. Nobody remembers. Nobody cares. They moved on from that. This is no different. 5, 10 years from now, no one's going to care what happened today. What they are going to say is that, darn it, I wish I bought more Tesla stock. Not financial advice, just my opinion. And what matters is long term. And I made my 2030 revision stock price here for Tesla here. I mean, I make revisions all the time, and I'll continue to make revisions. But this one, I brought down the margins even lower, brought the delivery numbers even lower than before. So yeah, keeping it more conservative. Check it out, guys. You won't be disappointed. And guys, get your merch. I bought the dip t-shirt because I'm buying the dip. And subscribe, and I shall see you guys in the next video. See ya.